Zach Engelbert with Orange County Real Estate, and today we're going to talk about the real estate market, specifically the last 7 days here in Orange County, California, and also the United States. The big question is, how's the real estate market and why has inventory not increased? Analysts were expecting it to increase and it just has not done so. So what's holding it back? Well, it's a good time to own, I would say. People have locked in really low interest rates and have had lots of appreciation. So because their property and their home is an appreciating asset, I think people are just trying to hold on to it. There's no urgency to sell at this time. And so inventory continues to be stagnant. All right, let's jump into the first slide. And this is inventory here in Orange County and the US. So in Orange County, properties for sale, this includes single family homes, condos, townhomes, and 2 to 4 units. It's down a little bit, 3,931. Not much, but just down a little bit from last week. In the entire United States, single family homes is up just a little bit, 1,300 or so, up to 551,458. And then under contract and pending in Orange County, up slightly from last week to 2,193 homes. All right, let's go to the next slide. And this is days on market here in Orange County. So the median days on market's up 34 and the average days on market is up 45. Both of those are up two days. Seasonally, this is normal. I mean, if we look at the graph for the last 15 years, we always have this normal seasonal slowdown here. So maybe that's what's going on with the days on market. A couple outliers, and really not a major outlier, but days on market in Laguna Hills is 24. And then, so 24, that's a really low number of days. It's a strong market there in Laguna Hills. They always have a lot of properties for sale. It's not like it's one small little sample. Some areas have maybe 1 or 2 homes for sale, so the days on market isn't that interesting there. But this is a good area, large town. So 24 days is good. There's a strong market there. Still lots of demand in that area. Dove Canyon, on the other hand, has dipped to 69 days. I think they really have a summer seasonal slowdown there every year. I mean, it's really hot out there. Like temperature-wise hot, not real estate market-wise hot. So 69 days has slowed down. It's actually cooled down a little bit, but 69 days is still considered a seller's market. Historically, anything under, I think it's 85 days is considered a seller's market. All right, let's switch to the next slide. And the first line is the sold price versus list price. This week, it's about the same, within a few $1,000s. Last week, homes were selling 1% less than the list price, so it's actually gone up a little bit. Pretty equal here. So that's telling us that there's not a lot of overbidding. Homes aren't selling for way over list price. So that's good for buyers, but I think because there's still so little inventory out there, and especially under homes priced under $1 million, there's still a lot of buyer competition, even though homes are coming in close to the list price. I think buyers aren't necessarily beating out their competition with the best price or with more money, but more so just a very good and well-written offer showing that they're guaranteed to close, because there have been some properties falling out of escrow. That number continues to increase week by week. I mean, it's not a huge number, but in the 4 to 5% range. So sellers definitely are choosing offers that look like they're going to close, that maybe it's 100% chance or 99% certain that it's going to close. So having a well-written offer is more valuable than, say, 5,000 over or 10,000 over. Sometimes the well-written offer wins. The next line down, immediate sales in Orange County, this has gone down quite a bit, 3.6%. Those are homes that have gone under contract or pending in the first 2 days that they were on the market. So this has also gone down in the United States to 17% of the homes. So that's gone down in both areas, and that's interesting. So we're going to keep our eye on that. It's not a huge number. I think the high in Orange County was close to 10%, and the high in the US was like around the 30% mark. So it's gone down quite a bit from when the market was really hot. Price reductions in Orange County. This number has actually gone down at 7.4% this week. So less homes with price reductions in Orange County, but in the entire U.S. it's gone up. Last week was 38.4, this week 39%, so that's gone up just a little bit. Again, that's a very high number, but we're going to keep an eye on that. And I think we talked about last week a couple of areas that could be inflating that number, like Boise, Idaho, that's at like 60%, around the Tampa area in Florida, around the 60% mark too. Those were investor-heavy areas, speculators looking to maybe flip a property within a couple of years, or just rent it out. So those investors have kind of went away and sat on the sidelines. So it's going to cool those markets, and it's probably better for buyers and people trying to buy their homes. It's probably better for those markets. But I think that's inflating the number of price reductions in the U.S. All right, the next number is the 30-year fixed rate. That's jumped up from last week quite a bit, 5.72%. So that's a big number. I also looked at the possibility of like a 5-1 ARM, where when the rates first started going up, there were some ARM products where you can get a fixed rate for 5 years or 7 years and save almost a full percentage point on the rate, maybe 3/4. But right now the 5-1 ARM is also 5.72%. So there's no savings in that. You might as well not risk it and just go ahead and lock it in for 30 years at 5.72%. Okay, so I talked to this guy about distressed sales last week, and he was, distressed sales are like foreclosures. And right now in the entire country, we have less than 1% of the listings are from distressed sales. And he said that it's not likely that there's going to be an increase in those. And the reason is people locked in these low interest rates and they have so much appreciation. So we're not going to probably see many foreclosure sales or distressed sales. But one thing that could cause that to happen would be big job losses. So recession with lots of job losses would cause that, but really we're probably a year out from that happening. And then he also said when that starts to happen, the process of getting a distressed sale or foreclosure onto market takes between 18 and 24 months. So for those of you sitting on the sidelines waiting for the economy to crash and then the housing market to crash, you're probably still 3 years away from that happening, maybe 2 years at best, but 2.5 to 3 years is what it looks like. And let's really hope we don't have a job loss recession. We don't want to wish bad things on the world, or especially our country. So hopefully we don't go through that. But we will keep an eye on those things and see what happens. So this data can be targeted to any area or neighborhood or city or zip code. So if you're interested in the data in your neighborhood, just reach out to me and I'll get this data over to you. If you're considering selling or buying, it's always important to have the data so you know what to expect there. And also being armed with that data when you're writing offers is very helpful as well. All right, well, thank you very much for watching. Have a wonderful week, and I will talk to you later. Thank you. Bye.